Hi everyone, welcome back to Saheb Academy. Today in this fifth video of issue of shares chapter, we are going to solve our third problem. And this is a very interesting question because here the shares have been issued at premium, at an extra amount, more than the face value. So how the journal entries will be passed, it will be very interesting to see that. And one more interesting thing is that here this is a difficult question. Here premium is not coming in just one installment like in allotment. No, it is there in every installment. So if you solve this question, then believe me, you will have a great clarity. And at the end of the video, what we are going to do is we are also going to see the balance sheet. How the things of this question will flow into the balance sheet, and you will understand the whole impact. Okay, so let's just read the question and let's start solving this, our third problem. Now see here, New India Limited was registered with a capital of rupees 1 crore in equity shares of rupees 100 each. So they are saying the authorized capital is how much? 1 crore in monetary terms. 1 crore divided by the face value 100 if we do, then we get 1 lakh shares. That's the maximum shares that we can issue. That's a maximum limit. Then they are saying it issued a prospectus inviting applications for 20,000 shares at 40% premium payable as follows. What does that mean? It means we have issued shares. How many shares? 20,000 shares. We have offered to the public, please, subscribe to our shares. At what issue price? At 40% premium they are saying. 40% of what? 40% of face value only. 100 is the face value, 40% of that is 40 rupees. Add these two, 100 plus 40 rupees, that is equal to 140 rupees. 140 rupees will be issue price. Based on this only we will get the money. Is that clear? Per share. Okay. And we have asked this 140 rupees per share in this basis. As you can see, in 4 installments. On application, we are asking 50 rupees. In that 50 rupees, they are saying, see in the bracket, rupees 10 is premium. Then they are saying on allotment, we want 40 rupees. In that 40 rupees, 10 rupees is premium. Then on first call, 30 rupees they want. In that 30 rupees, in the bracket, they are saying 10 rupees is premium. Do you understand this? On second and final call, they are saying we want 20 rupees. And in that 20 rupees, 10 rupees is premium. Fine. If you add all this 50 plus 40 plus 30 plus 20, that is equal to 140 rupees issue price. Okay, this is how we are getting the issue price, the money. Fine. Then they are saying shares were subscribed and amount due was received. Okay, all the shares were subscribed and all the amount was received. Fine. Pass the necessary journal entries. We'll do that. And also show share capital in the balance sheet of the company. Yes, we'll do that. We'll show you more than the share capital because I want to give you clarity. So that's why I will explain more things when we'll see the balance sheet. Okay, don't worry. Now let's just do the rough working note that we do. See here, first what happened? We issued 20,000 shares. They said shares were subscribed and amount due was received. All shares were subscribed. They are not saying more or less, nothing. So equal only. We issued 20,000 shares and we got 20,000 shares applications. It is equal. So it is full subscription. Simple, easy, and that were allotted also, no refund, nothing. Simple. Then about this we have to understand properly. See here, it's really simple. See, face value is rupees 100, issue price is 140. How we got 140? They said 40% premium. So on 100 we calculated 40%, we got 40. We added, that's equal to 140. And face value will go to equity share capital account, and the money will come on the basis of issue price only. Right? Yes. So see here on application we asked 50, but you have to understand they said, in all the bracket they have said 10 rupees premium, 10 rupees premium, 10 rupees premium. What does that mean? It means 10 rupees premium is included in those installments. The remaining amount is face value. Okay. On application we have asked 50. Out of that 10 rupees is premium, remaining is face value. Okay. So that's what it is coming over here, 40. Is that clear? So when you pass the entries, pay very proper attention, what is the face value and how much is the premium, so that you can bifurcate properly. Okay, you will not make any mistake. So that is what this rough calculation is very important. Same with the allotment, first call, final call. You can see in 40, 30 is face value, 10 is premium. That is why 30 is coming over here. See, in this first call, 20 is face value, 10 rupees is premium. In final call, in this 20, 10 rupees is face value, 10 rupees is premium. Is that clear? If you add all this, 140, and here it is 100. This is the face value, this is the issue price. Easy? Yes. Now we can easily pass the journal entries. So let's begin the journal entry. This is a very important and simple question. Let's begin. Now see, here we have the journal entries. Let's understand how to pass these in the books of New India Limited. It's really simple. First, what happened? First, in this question, we all know we got applications from the public, right? They want shares. How many? 20,000 shares. We got 20,000 applications. Along with the application, we also got the money. No, money also came into the company. So we have to record this transaction first. You all know bank account debit. How 10 lakh? See, it's really simple. The 10 lakh is really easy. What do we do? What is the shortcut of share application? The shortcut of share application is applied into IP. Applied into application part of IP. See here, applied 20,000 shares into 50 you are going to do. Yeah, application part of IP. Do you understand? This is how the cash will come in, right? So that's 10 lakh. 20,000 into 50, that's 10 lakh. And why we have got this money? Because of share application. To share application, 10 lakh. Easy, simple. Next entry, what will happen is you are going to cancel this share application account because this is just a temporary dummy account. Here it is credited, no. Now you will debit it and cancel. Okay, you have to do opposite. Share application account debit 10 lakh, this account is cancelled. And the amount from this account has to be transferred somewhere. Where it will be transferred? Really easy. It will be transferred to equity share capital account. But understand, in equity share capital account, only face value will go, right? So 20,000 allotted shares, yeah, 20,000 allotted shares into face value part of application. That is what you have to do. Let me just show you. In equity share capital, what will go? The shortcut, allotted shares into face value part of application, because we are doing application now. So see here, to equity share capital, 20,000 shares into 40, that is equal to 8 lakh. Is that clear? 20,000 shares into 40, that is equal to 8 lakh. Then whatever is the extra, the balancing figure, that will go to securities premium, Yeah, because you all know now, in this 50, there was 10 rupees premium. 20,000 into 10 if you do, how much is that? That is 2 lakh, no? Yeah. If you want, you can calculate or just take it as a balancing figure. That's also fine. The narration you can write in your own words. Fine. Okay, so application you understood. Yeah. What is the logic of this? The logic is really simple. Why capital is getting credited? Because capital is increasing. Capital is what? Yeah, it has credit balance. It falls in equity, no? So if it is increasing means you have to credit. And then securities premium also falls in equity category, right? It's a reserve. So it has credit balance. If you want to record it, it is increasing, then you have to credit. That's the logic. Fine. So this is how it will happen. Okay. Next comes the allotment stage. In allotment, what happened? In allotment first, what do? We make it due. You all know. In application only, it is opposite. In application, the chronology is what? First we receive the money, then we make the due. Yeah, or the transfer to capital, to securities premium, or maybe refund, like that. But in all the other stages, in all the other installments, what happens? First due, then receive. Due, receive, due, receive, like that. Okay. So in allotment stage here, what will happen? First we'll make it due. How to make it due? Debit the allotment account. Really simple. See here, debit the allotment. What is the shortcut of allotment? Allotted into allotment part of IP, right? So if we see that in our rough work, allotted 20,000 shares into 40. That is what we are going to do and take the amount. See, share allotment account debit 8 lakh. How 8 lakh? As I said, no, 20,000 shares into 40, that is equal to 8 lakh. Yeah. Now, is this entirely because of capital? No. All of this will not go in capital. How much will go in capital? Only face value will go in capital, right? 30 rupees will go in capital. So 20,000 into 30, that is 6 lakhs. So 6 lakh will go in capital and extra will go in securities premium. The balancing figure, I mean, will go in securities premium. Do you understand? In each of the stages there is premium, so that is why we have to do this. Mostly in simple question, what happens? Mostly in allotment they give you premium, right? But here in this question, everywhere there is premium. Okay, so you understood this, right? The same logic, capital is increasing, securities premium is increasing, that is why they are getting credited. Okay, right? And then what will happen? Then we'll receive the money. In the question they have said all the money has been received. So share allotment account is a temporary dummy account like share application. What you have to do, it was debited, no, to make it due. Now to close it, to cancel it, you have to do opposite, you have to credit it. See here, to share allotment, can you see that? To share allotment account 8 lakh, okay, and money we have received, so bank account you have to debit. Yeah, bank account is what? Is an asset account. If it is increasing means you have to debit, or you can think money is coming inside the company, you are debiting it. Is that clear? Right, simple and straightforward. Then what? The same thing you have to repeat with first call and second and final call also. Really easy. First make it due. How to make it due? Debit it, right? Share first call account debit. Yeah, how did we get 6 lakh? Really easy. What is the shortcut? Allotted into IP. Allotted 20,000 shares into IP 30. Yeah, so if you do that, 20,000 into 30, that's equal to 6 lakh. Is this all because of capital? No. How much is because of capital? Because of capital is only 20 rupees. Yeah, allotted 20,000 into 20, that is 4 lakh. 4 lakh is because of capital. I told you, face value only will go to equity share capital account. So credit the equity share capital to equity share capital account 4 lakh. Is that clear? Capital you are increasing basically. Fine. 6 minus 4 is how much? 2. 2 will go to securities premium. Okay, whatever is the balancing figure, the gap, directly take it in the securities premium like this. Simple, easy. Narration you can write on your own. Then after this, what will happen? We are going to receive all the money, right? First call account is also temporary dummy account. Do opposite. It is debited now, so credit it and cancel it off. Yeah, to share first call account 6 lakh. You have received all the money, debit the bank account. Is that clear? Fine. Or you can think you have received all the money. Why you have received this? Because of share first call. Like that also you can think in your mind, right? 6 lakh, 6 lakh. Yeah, share first call account finished. Then we have second and final call. See here, second and final call, how much? Second and final call 20 rupees. So how do you do this? It's really simple. The same shortcut you have to use. Share final call allotted into IP, right? Allotted into final calls part of IP. That's what it is. Fine. So 20,000 shares into 20 you have to do. So that's equal to 4 lakh. Yeah. So debit the share final call. Yes. Share final call account debit 4 lakh. You have to write the whole thing, okay? Share second and final call, like that. If it is third, then share third and final call. Is that clear? Okay, here I have just written final call. Fine. So 4 lakh you have debited. Now, is this all because of equity share capital? No. There is also premium. So properly you have to see this. Yeah, in equity share capital, what will go? In equity share capital, 20,000 shares, only the face value part of final call will go. 10 rupees. 20,000 into 10 rupees, that is equal to 2 lakh. So 2 lakh will go in equity share capital and the remaining 2 lakh will go to securities premium. Fine. This is how you will make the share final call due. Due means what? You are asking the money from shareholders. See, the call is due, please pay us, right? That's what it is. Then the money will come from the shareholders, bank account debit 4 lakh, and the share final call account, yeah, dummy temporary account, it has been debited. Do opposite, credit to share final call account 4 lakh. Yeah. Or you can think we have received 4 lakh. Why? Because of share final call, to share final call account, like that, being final call money received. Is it clear? Really simple and straightforward. Yeah, you understood all these entries. Yeah, only the application thing is little bit opposite. Rest everything is same only. Copy paste, copy paste, copy paste. Just the names are changing, right? Simple and straightforward. Yeah, you understood this? Okay. Now let's just move on to the balance sheet. Okay, let's just see the balance sheet now. Now see here we have the balance sheet. Let's understand how to do this. It's really simple. In the question they asked us to show just the share capital in the balance sheet of the company, but what we are going to do is we are going to see everything, okay, the whole entire relevant part. Fine. So see here, this is the balance sheet, and the top we have to write balance sheet as at 31st March 2025, right? The date I have just taken by myself, the date is not given in the question, okay? And then the format is really simple, particulars, note number column, and then the amount column, okay? You have seen horizontally balance sheet in class 11. This is just the vertical balance sheet, right? First you have equity and liabilities, then you have assets, right? In IFRS or Ind AS it is opposite. There they will have assets first, then equity and liabilities. All right, okay. But we are following Indian GAAP, so equity and liabilities first, then assets. And see, first we have what? Shareholders funds. Under the shareholders funds heading, we have first share capital, then reserves and surplus. Okay, both of these we have to show right now, because in share capital, capital will come, in reserve and surplus, premium will come, securities premium. Okay, note number 1, note number 2. Now what are these notes and all? Notes are nothing but just extra explanation. Yeah, we keep the balance sheet very clean. See, share capital, one amount, yeah, one line item, we take it like this. And then to give more explanation regarding that, we have separate notes for each items, right? See here, notes to accounts. So when you will prepare the balance sheet, directly you will not write the amounts over here, you will leave it empty. You will come to notes to accounts, do all the calculation and everything, and then take the amount over here. Let's just see regarding share capital. See, in share capital what happened? Share capital first, see, Companies Act says that you have to show what? Authorized capital. Authorized capital means the maximum limit that is permitted to issue, yes? So 1 lakh equity shares of 100 each, we know that from the question. They said no, 1 crore of 100 each. 1 crore divided by 100 is what? 1 lakh shares. So 1 lakh shares into 100, 1 crore. Yeah, that's the maximum limit. And then you also have to show how many shares you have issued. Yeah, this is also just presentation. Okay, there is no use of these two in the calculations. Okay, yeah, these are not counted. Okay, issued capital, 20,000 equity shares we have issued, no, of 100 each, that's 20 lakhs. Yes, yeah, this is what we offered to the public. Then what? Then there is subscribed capital. Now in subscribed capital, what we are doing, we are combining over here and writing it along with the fully paid up capital. Okay, so see here, subscribed and fully paid up, 20,000 equity shares of 100 each, no, this is what we issued, and the entire issue was subscribed, allotted, yeah, and then we called up and all the money we received, so it's fully paid up, directly we can take it. Yes, this and this will not be considered in calculation and all, this is just presentation. The main thing is this only, here only you will do what? If there is any shares forfeited, you will add, any calls in arrears, you will subtract, all this will happen over here. Is that clear? And that is what, here you will get the one amount which will be taken to the balance sheet over here. Fine, so this 20 lakh will go over here, share capital 20 lakh. Is that clear? Simple and straightforward. Share capital done? Yes. So how is this 20 lakhs? You all know now, it's really simple. See what happened, 20,000 shares allotted into 100, only face value in equity share capital, only face value will go, that is how it is. Okay, and then what? And then we have reserve and surplus. In reserve and surplus, what will go? As I said, securities premium will come under reserve and surplus. So in note number 2, see here, reserves and surplus, securities premium, 8 lakh. How is this 8 lakh? It's really simple. See, securities premium came in 4 stages. Securities premium 2 lakh over here, 2 lakh in allotment, 2 lakh in first call, 2 lakh in final call. Yes, so 2 lakh plus 2 lakh plus 2 lakh plus 2 lakh, that is 8 lakh securities premium. Easy. So you can understand now how it is bifurcated properly in the balance sheet. Can you see in the balance sheet share application, share allotment, first call, final call, anywhere? No, all those accounts got closed. Credited, debited. See here, debited, credited, cancelled. All these got cancelled. The only thing that is existing is what? Equity share capital account, securities premium account, and bank balance, the money that we received. Yes. So what is that money? That is current asset, no? So see here in the assets, we have to take it under current assets, cash and cash equivalent. That's the heading. Inside that we take all cash and cash equivalents under in the note. But here there is just one item. So in the bracket only I have written over here bank balance. So that is equal to 28 lakhs. How 28 lakhs? Check the journal entries. If you see the journal entry, see, first we got 10 lakh. Then in the allotment also we got 8 lakhs. So that's 18 lakhs. And then on first call we got how much? 6 lakh. And in final call 4 lakh. 6 plus 4, 10. 10 plus 18, that is equal to 28 lakhs. Yes. So 28 lakhs money you have got in your bank account because of this share issue. Is that clear? So see, it is tallying also, because we have taken the whole relevant part. Okay, 28 lakhs, 28 lakhs. Is that clear? But in the question they just asked this much, just the share capital they wanted. Okay, just the share capital. Fine. Okay, simple and straightforward. And then one more important thing that I had to tell you, see here in this question, the question specifically told us that securities premium is there in all of the stages. In the bracket they gave us, right? We did the working note and everything, we understood completely. But sometimes this will not be given. They will not tell you where is premium, in which stage. At that time you have to make assumption that all of that premium is there in allotment stage only, and the securities premium in the journal entries will only come in share allotment entry over here. The securities premium here, all normal entries will be there. Yeah, like when shares are issued at par, how entries comes over here, like that. Is that clear? Yeah, but here this is the comprehensive, little bit complex type question, because here premium is there in all stages. Fine. So you understood now. If the question says the premium is there only in application, then how to do? In just this one question you understood how it can come, right? All the possible scenarios are combined over here, isn't it? So this is a very good question. Okay, so that's all for this video. I hope you have understood each and everything. Okay, if you have any doubts, comment down below. And then there is Instagram channel, you can message me over there. Also on Telegram channel, I will scan and put the notes over there, right? So that's all for this video. See you in the next video. Bye bye.